Loan to value, or LTV, is a key metric lenders use to assess the risk of a mortgage or loan. LTV represents the size of your loan compared to the total appraised value of the property you are buying. A common goal for many home buyers is keeping this ratio at or below 80% to avoid extra monthly insurance fees. LTV influences your loan approval, your interest rate, and how much equity you actually have in the home from day one. While LTV measures the debt side of the equation, equity represents the portion of the home you truly own outright. This chart shows how a larger down payment directly lowers your LTV ratio, which reduces the lender's perceived risk. Remember that a lower ratio generally leads to more favorable borrowing terms over the life of your mortgage. Check your math before applying for any loan. Thanks for watching, and feel free to subscribe for more finance basics.